Good day to you and welcome back to Luke the Trader. Today we are diving into the world of investing with a focus on a particularly interesting sector, metallurgical coal or met coal. But before we proceed, just a quick disclaimer, the content of this video is for informational purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. The intention with this video is to introduce you to Colonial Coal International Corporation, which trades on the TSX Venture Exchange under the ticker KD at about 2.3 Canadian with a good upward trend, and it also trades on the OTC markets. Let's take a quick look at its history. Colonial Coal is a Vancouver-based company with a primary focus on metallurgical coal exploration and development in British Columbia, Canada, until about 2019 when they started their sales process for the two assets, Huguenot and Flatbed. The company was founded in 2005 and has since been led by a dedicated management team with years of experience in the mining industry. The management team consists of David Austin, who is the chairman and president, as well as the CEO. He has founded two companies besides Colonial Coal, one being Western Canadian Coal, which sold for 3.3 billion Canadian to Walter Energy in 2010, and NEMI, which was sold to Anglo for about 400 million Canadian dollars. We also have John Perry, who is the Chief Operating Officer and has worked for 45 years as a professional geologist in exploration and development of coal and mineral projects, both domestically and internationally, as well as working alongside David Austin for decades. Furthermore, we have Mr. Bhattacharya, a director and known businessman in India who was former chairman and managing director for Coal India Limited, which is arguably the largest coal company in the world. One notable director as well to mention is Greg Waller. He has worked for Teck as a senior vice president for investors relations and strategic analysis for years. This is the management team of Colonial and shows that there is decades of experience and it is not just a one-man show as it is often said by certain individuals. Now, let's consider Colonial Coal's assets and the market it operates in. Colonial Coal holds a significant portfolio of met coal properties in the Peace River coalfield of northeastern BC. These properties are known as Flatbed and Huguenot and boast high-quality metallurgical coal reserves at about 700 million tons of resources. Notable things to consider when assessing for the coal quality besides coal yield is the ash and sulfur content, which are both excellent for these assets. The CEO has also said publicly on an interview that Colonial Coal's assets, which are considered hard coking coal, will trade at around 5 to 10% less than Peak Downs coal in Australia, and therefore positioning it currently at about $300 per ton. The assets have no significant infrastructure such as railways. These would all need to be built. When looking at the PEA, which gives a good amount of insight into the economy of the project, it is apparent that it will pay itself off in about 3 to 4 years depending on the coal price and equipment needed. However, one also needs to keep in mind the accuracy of the preliminary assessment. The assets have also the benefit that they are in one of the best jurisdictions for mining and can easily export products to the Asian markets, which are the most important for the met coal market. When looking at the Whitehaven coal presentation, it becomes clear that there is a high amount of demand for hard coking coal, and it is a type of coal quality that is actually expected to experience the most amount of demand growth, unlike lower quality types of coals. There is opportunity to capture due to the fact that there has been next to no investment in the sector for the past few years, and also considering that most furnaces built in Asia are blast furnaces which require about 770 kilograms of coal for 1 ton of steel. There are substitutes out there such as hydrogen or electric arc furnaces. However, they're not appealing to low to middle income economies such as China and India. Furthermore, hydrogen is questionable if it is even profitable to operate, and electric arc furnaces are only appealing to developed countries due to the energy demands. So, why consider investing in Colonial Coal? Well, there are three bullish arguments to consider. First is the asset and management. We have a very experienced management team that has demonstrated that they can succeed, as well as that they have been responsible for major developments in the area the past few years. David Austin, the CEO, has also said in an interview that Glencore has consulted them for their Sakhanka asset in relation to the permitting process, which makes apparent how important they are for the area to the extent that a major asked them for help as they don't know what they want to do with their troubling asset. The coal quality is also amazing and is unlike semi-soft coking coal or PCI coal. Prices for hard coking coal steelmaking are at heightened levels and long-term pricing sits at about $225 per ton or more. The second reason is the fact that there is a super cycle happening in the met coal industry, with ESG taking a backseat the past few months and met coal companies sprawling in returns on the Nasdaq, such as Alpha Metallurgical Resources. It becomes apparent that the coal industry is in the best shape that it has been in the past few decades, as the prices have contributed to another resurgence. M&A has also been very active, as it all practically started last year with Conuma buying the Quintet asset for 120 million Canadian dollars, as well as 25% of net profits, which works to above $2 per ton or more, depending on the profits that they will boast. A few months later, the activity has accelerated as Whitehaven has bought the asset from BHP for up to $4.1 billion. And the magnum opus in the end was when Glencore decided to buy Elk Valley Resources from Teck with Japan at a deal valued at nearly $10 billion. There is a big met coal cycle happening and the need for met coal is apparent. However, it does not solve the underlying issue of supply. It's just changing hands, and that's where Colonial Coal is supposed to step in. The last bullish argument to consider is that there are about 18 prospective bidders, as the CEO has said. It makes it clear that there is a big interest for these assets. With all this time passed, a lot of these bidders must have come past the due diligence phase straight to the documentation stage. Interested countries include China, India, Australia, Japan, Switzerland, and South Korea. They are the key players who need the coal, from Glencore to Hancock and Coal India Limited, for example. Of course, no investment comes without risks. I will highlight three bearish arguments against Colonial Coal. First of all, the argument that the company has been trying to sell these assets for a few years and has still failed to deliver on any of this. The CEO has said that COVID screwed them over, as once they started with the process and had a potential deal in place, COVID came in and screwed it all over to the point that prospective bidders wouldn't even talk to Colonial for a few months, never mind sending an email. This has held up until October 22, when the travel restrictions were lifted, giving the ability to do site visits and going to the data room. An additional bearish argument to consider is that Colonial does not have an environmental permit, which would add additional risk to the project. The CEO has stated this is not done due to the fact that every company envisions a different project size and other such requirements. Therefore, it would just be added dilution to the shareholder. There are lots of notable analysts that have this as their main argument, as they don't believe it can be sold due to the fact that the projects sold thus far in the M&A cycle have been producing assets. Sakhanka being denied has only contributed to this narrative, and there is also a claim that there are no permits or barely any given anymore to coal companies, with the latest given to Murray River in 2013 with a limit in CO2 emissions attached to it. The last bearish argument is that important bidders such as China and India will not be able to give a bid due to the fact that the government will strictly oppose this, as claimed by some individuals, therefore getting the bulk of the competitors out of the process and adding a huge amount of risk to the sales process. Besides that, there's also the claim that people and government do not appreciate such a project being advanced and thus trying everything in their power to stop it from ever happening, which will be a possible risk to bidders. Before we continue, I want to make a disclosure. I personally own shares of Colonial Coal. However, it is essential to remember that my personal investment decisions should not influence yours. Always conduct thorough research and consider your own financial goals and risk tolerance before investing in any stock. I have to say that I'm biased and therefore consider the bullish arguments to weigh over the bearish arguments, which are not factual or leaving out facts. The management team is working day and night to talk with the government and First Nations to make clear that a process will go swiftly, even with nations such as India and China, therefore eliminating the geopolitical risk. The Premier Minister of BC has also made clear that he likes exporting met coal, as there is not a real substitute for it currently for middle or low income countries. The team also knows how to permit projects, and there have been other types of permits which have been filed and also received, so the myth that met coal companies receive next to no permits is out of the equation. Sakanka was a bad example, as it was open pit and had a critical habitat for caribous. The CEO has acted on the caribou issue beforehand and has given land away. People get the caribou issue wrong. They make it out to be such an extreme issue. It's only tedious as one needs to address it, but that's it. Due to the fact that there are good relationships to First Nations and presumably the government, it makes it clear that advancing such a project is easily doable with this management, as it will also help the bidder after the process is done, due to the fact that they will stay a few years with the bidder to help them go swiftly through the process. The fact that the company has not sold its asset just yet makes it rather a result of COVID, as once the travel restrictions have been lifted, it is apparent that activity has increased when looking at past interviews. Therefore, it can be logically assumed that several bidders are already at the documentation stage and past the due diligence process. How close they are, no one knows. Not even the CEO can know when it might happen, as the bidders are probably not willing to show their cards right away. They will not just say, "Hey, I will bid tomorrow, David. Are you ready for the bid?" With all this outlined, it becomes clear that Colonial Coal is an interesting case and offers great risk-return rewards. If one wants to consider what could potentially come out in terms of returns, I would consider checking out Philip Gunst, who has extensive due diligence laid out and shows what potential price targets are at a certain dollar per ton range. But also that the price will be determined by the share price is simply wrong, due to the fact that the per ton value is the valuation method that the CEO wants to have considered, as implied by interviews, and this is the argument that he will have to bring across to bidders, and the bidders that don't like this argument will eventually decide to leave the table. With that being said, the thesis around this is simply that met coal is needed, and Colonial Coal is a needed solution. Therefore, the risk reward is high. Sometimes it really is that simple. I do not provide any price targets, as this is something that any individual investor should make out for themselves. With that said, that wraps up our introduction to Colonial Coal. If you found this video helpful, don't forget to like, share and subscribe for more content on investing and finance. Thanks for watching, and until next time, happy investing.